On to business news, and Standard Chartered Bank's global outlook indicates that global markets remain optimistic despite persistent inflation concerns. Now, central banks have signaled continued support for economic growth through rate cuts. Analysts project a positive year for equity markets, with bond yields climbing steadily. Investors are expected to balance risk and caution in 2025, keeping a close eye on inflation as a key factor shaping monetary policy. Let's get more from our very own Jimmy Mbogo.
Central banks worldwide are expected to continue cutting rates further in 2025. Consequently, the return on government security is projected to decline significantly. This trend prompting high net worth Kenyan investors to explore alternative investment opportunities in the United States. Analysts predict that the U.S. market will strongly influence the performance of global markets. Despite the optimistic outlook, analysts warn against relying on cash as an asset class.
But this year, the question we are getting mostly is clients have already seen yields falling. If you look at the money market, the promised yield is coming down 1% as central bank cuts the rates, as TB rates come down. Is expected, right? So the questions now is, where else can I go?
We're coming off on those short-lived periods where cash did okay. And the one lesson from history is these periods tend to be very short-lived. Usually either cash yields fall or equity bond returns start to rise. And falling interest rates mean that cash doesn't pay you so well.
As markets advance into the new year, analysts agree that diversification and adaptability will be crucial. Monitoring inflation trends and their implication for economic growth will also remain a priority. Central banks are determined to prevent a resurgence of inflation that could derail growth trajectories.
Whatever else is there, we still have to think about how do you also diversify across different asset categories and jurisdictions and geographies, so that you manage certain pitfalls that may come.
In a bid to offer alternate investment opportunity for Kenyans, the Nairobi Securities Exchange is planning an aggressive campaign to attract retail investors and boost market activity.
We don't have a problem with liquidity. It's how to channel that into the market. So this will be a key push for us, including coming up with products that enable retail investors to participate in our market without a lot of difficulty and technical requirements.
Investors have been advised to remain vigilant as experts project a bullish year ahead. Jimmy Mbogo, Citizen TV, Nairobi.